Didn't like that one. No.
Let's get worse.
Yeah. Oh my God.
I hate
you. My name is Ryan Elliott. Welcome to The Closing Table. I am a real estate agent here in St. John's, Newfoundland, and today I'm going to be interviewing Andrew Nee. He is with East Coast Mortgages, and we're going to be eating some hot wings as we get into some hot mortgage questions. Let's go. First, we're going to start off with the classic. I'll let you go first. I think you're tougher than me.
I don't think so.
Can you explain the basics of how a mortgage works for us in Canada and for those who are just starting out on their home buying journey? We work with a lot of first-time buyers, so I think this is an easy question and hopefully an easy sauce.
The first-time home buyer in Canada will go through a pre-approval process. So that's the application that says what you do, how much you make, how much you owe. That determines what you qualify for. So if you qualify for 300, 400, 500, etc., that comes through the application. So we take your debt, your credit score, your assets, and that'll give you your payment, your property tax, whatever you're looking for there. And then we send it into the bank for an approval.
So then you take that and basically you say, okay, well, I'm okay with this payment. I'll move forward, or can we bring it down, or what do I have to do to get rid of to improve my ratio to see what I can improve?
Right, that could be paying out debt. It could be adding a co-signer. It could be as simple as what you qualify for might not be a comfortable payment for you.
Right.
Like this hot sauce was comfortable, this one might not be. So it's not always about the qualification number. It is about the payment, especially in today's market.
Right. So that one wasn't too bad. That was the classic hot sauce. Now we're going to go to number 2. This is Dawson's hot sauce. So let's get into some details here. In today's market, are more people going towards a fixed or a variable option?
Well, right now we've noticed that more people are going towards a short-term fixed. There's a lot of uncertainty in the market right now, and no one really knows where the rates are going to be. In the last few years, they've been increasing, but we seem to have turned the page and going in a decreasing rate environment now. And so it's hard to lock in for your typical 5-year term. If we talked 2 or 3 years ago, almost, I'd say 90% of my clientele, 5-year fixed, let's lock it in, let it ride.
Right.
Now we're getting a little more creative. We have 1-year, 2-year, 3-year fixed rates, which have been more popular. And the variable rate is kind of kicking the can down the road. Let's see where these fixed rates go. Yeah. It's not, no one wants to lock in for 5 years right now. We're still seeing high 4s, low 5s on an insured mortgage, or 5.25 plus for conventional.
What's the average homeowner interest rate right now?
It's about 3% still.
Yeah.
We haven't felt the majority of the pain that's still to come for some people. We're coming up on renewals now where people's mortgages are jumping $100, $200, $300 in payments.
Right.
So they're now just starting to see the effects of the last couple of years.
Let's try this one.
Let's go.
Good flavor, but
it's getting hotter already. Already.
Oh yeah.
I'm gonna have to start combining the answers to these questions.
You can notice that one. Holy cedar smoke.
We're 2 in.
It's a good taste, but
it is actually.
Dip into the milk here already.
I don't want to touch it yet.
Oh, that's warm.
I feel like I bring my hands up. I hate to.
Just shaking. Number 3, we are down the line. Clark and Hopkins, Calabria. That looks spicy.
It does.
In recent years, how have changes in the Canadian real estate market affected mortgage strategies for, again, the first-time home buyers?
The first-time home buyer seems to, especially in Newfoundland with the changes across Canada, to the stress test they implemented. It was, they brought that in. And originally when it came out, they were stress testing you at 5.25. When rates were mid-1s, high 1s, even as low as 0.99. You had to qualify at a 5.25% rate. Your payment stayed in the 1s, but you qualified in the 5s. So your affordability and what you could actually qualify for was a little bit less.
Yep.
But it protected you in situations like we saw 2 years later.
But it gives good comfort too.
Where rates took off.
Yeah.
But now what they qualify you at is whatever your contract rate is plus 2%. So if you're paying 5.5%, you have to qualify at 7.5%.
Right.
Which,
brings affordability down.
It takes your buying power way down.
Yeah. So do you see many clients come through the door where you're having that conversation and they'll just pull back and say, okay, I'm not ready for doing this, or do they, like, I mean, I guess it's all in the approach.
Yeah, absolutely. And we go through it in pretty good detail with them. Exactly, you know, we outline these steps before we even take any information in the application.
Right.
So we'll tell you, you know, hey, you know, single purchaser, it's hard to qualify
Right.
as a single
Yeah.
applicant. It really is. You know, I almost need that dual income.
Yeah, no, absolutely.
Right, you know, it's pretty tricky, especially with, you know, in Canada right now, the average income doesn't buy the average home price.
Right.
So it is tricky, and it's getting doesn't seem to be getting any easier now, but you know, we'll see where rates go.
Generally, within the process, get pre-approved, call an agent, look at homes. You're usually frontline. Do you see much frustrations on that side?
Yes, especially with rent being high. Rents are, I mean, I've never seen rent this high in St. John's. I don't know about you, but, you know, we get a lot of, well, I'm paying $2,000 a month rent. Why don't I qualify for a $1,500 a month payment? And again, if we go back to the application, it goes back to the 7.25% qualifying rate right now. And that takes away a lot of your purchasing power. How's that one?
That one's spicy, yeah. Oh, God. It's making me shake.
I kind of kicked it a little bit later. I can see your face going right everywhere when we eat.
I can feel my face getting red. Okay, number 4. Doesn't sound too bad. The angry goat.
Yeah. The angry goat doesn't sound great.
So how do changes in the Bank of Canada's interest rates impact mortgage holders? And then second part of that question is, what can people do to mitigate that change?
There's 2 different types of variable rate. There's an adjustable, which your payment actually moves with every increase or decrease. So go up or down or stay the same depending on what the Bank of Canada suggests. Or you have what's called a static payment, where the
Get in now, man.
I see you shaking. Or you have what's called a static payment, which your payment doesn't change, but the amount you pay towards principal versus the interest is what changes.
Right.
So potentially we're seeing mortgages at the height of the increases. We saw mortgages go from 25-year AM to, I've seen them as high as 75, 76, because you're technically underwater.
Right.
You know, you're not paying any principal and you're not even covering your interest payments.
Right.
So to do that, they stretch out the amortization to get you
through.
level.
Yeah.
Right. So it's they do have a pretty profound effect in terms of getting ahead of it, preparing for it. I mean, there's no keep your debts low and spend what you can afford. Really, is the real way to break that down there.
Oh, man. That one's immediate.
Actually, it's funny enough. These questions are getting it's harder to concentrate.
I can't even. We joked about it, but that one I couldn't follow.
No, I'm having a hard time concentrating on the answers. Really, on the 4th one.
Oh, man. Number 5. Los Calientes.
Also 5 out of 10.
I've had these ones on chips. They're not too bad. It's a nice flavor.
Well, that's not what I want to do.
You're feeling it.
That's not what I want to do.
I'll get the question out for you. What are some of the most common reasons mortgages are denied? And how can applicants improve their chances of approval?
Number 1's credit for me,
Okay.
especially first-time home buyers. The insurer's guideline technically says, you know, you need a 600 credit score. It's very tough to get it approved at 600. We're typically seeing 650 for most lenders.
Right.
And if it's conventional, again, it's up to the bank's discretion. The credit score is the number 1 reason. And then it's, again, I touched on it earlier, but the income, the actual hitting the qualifying amount. I mean, there's lots of people that come in and looking for a 350 house and they qualify for 165.
Right.
You're better equipped to answer this question, but what's out there for 165 right now?
Yeah, no, exactly.
There's not a lot, and especially if you're looking for certain areas, it really limits what you can buy.
So debt is debt.
Yeah.
There's no ranking there. For
Right.
credit score, is there any sort of like checklist that, you know, as within your field you see people use, or is it just
Yeah, and
a
I mean,
comfort
there's
level?
lots of parameters to what makes up a credit score, but some of the main ones are utilization, the
Right.
time you've had credit,
Yeah.
and making sure your payments are on time.
Yeah.
I mean, that's the biggest thing. If you're missing payments and your credit is maxed every month,
Yeah.
your credit score is going to be lower. You should aim to keep your utilization below 30%. Some credit scores will say 50, but 30 seems to be the number.
That's
there
the sweet
where you
spot.
keep- Yeah.
Cool.
So it's not easy, especially in today's economy with everything going on. I mean, these chicken wings are quite expensive from where they used to be, and I wish we never had them. But
Do you see many applicants that don't have? I mean, they have a great job, don't have much debt, but don't have much credit.
yes, and the other thing is, it's tricky. These, if you have a collection items, that shows up on your credit report for 6 to 7 years.
Yeah.
So I mean, yes, we can pay it out and proceed from there, but if you have multiple, it's pretty hard to get your score up, even if you do pay them out to get it mortgageable. There's a difference between a 700 credit score, a good 700, and a 700 that has past history.
Right.
They're looked at two different ways.
Yeah.
But if you do qualify, I mean, you're qualifying for the best rates. It doesn't matter if you're, 650 or 750. You're still gonna.
It's doing it. Yeah. Cool. Let's give this one a try. I'm excited for this one. That one's got the best flavor so far. Oh my, am I getting red in the face? I feel like there's veins popping out.
I can feel sweat coming under my eyes.
All right. That one's done. Moving on to the Queen Majesty Cocoa Ghost Hot Sauce. So where do you see Canadian mortgage rates and housing market heading in the near future? Ideally within the next year, just so you don't go too far. And how should potential buyers and sellers prepare? So I guess from the seller's perspective, you're into your mortgage rate, your loan is starting to come up. Should you renew? Should you sell?
Yeah, and that is a case-by-case answer for that. The last one was hot. It's a case-by-case answer in terms of selling. You don't want to trigger a big penalty. But if you're downsizing, upsizing, we are seeing a lot of downsizing. People are realizing they have so much space. And I can't remember what I was saying. Depending on the mortgage they signed up for, there could be lots of options. It could be portable, so there's no penalty. You take it from one house to the next, and you adjust based on your new amount that you're paying.
Yeah.
But we seem to be in a decreasing rate environment, but there's just not a lot of inventory,
Right.
as you know well.
As I can tell, yeah.
So you see a lot of still bidding wars, which is pretty strange considering rates are near 5%.
It's an interesting time because you look at, the last year, and we've been struggling with increased interest rates. And we've also been, recognizing and seeing that as the interest rates increase, also housing prices have increased.
Right.
Typically, it's one goes up, one goes down.
So you have kind of making it harder to qualify. Again, interest rates are going up, qualifying rates going up, house prices are going up.
Yeah.
So you're buying less and paying more for less.
Right.
But we seem to be in a decreasing rate environment, at least the last 6 weeks. Rates have kind of slowly going down. They took the elevator up, they'll take the stairs down.
Right. Yeah.
But at least it's moving in the right direction.
Didn't like that one. No. Oh my God. You got a lot of veins popping out, man.
You're this color, so we're good. Oh, this one's going to be so much better.
Oh boy. It's still hitting, hey? Mm-hmm.
Let's get worse.
Yeah. Oh man. All right. We're looking at the 13 Angry Scorpions, which sure is a delight. And we'll talk about any government incentives or programs that are out there and available for home buyers, for first-time home buyers, whatever the story is.
The provincial government still has, or Newfoundland Housing, has a program with where they actually loan you the 5% down payment.
Right.
My tongue is burning.
Mm-hmm. That's fine. That's normal.
The down payment assistance program is Newfoundland Housing's program where they're actually loaning you the 5% down payment. It's not repayable. It's repayable over 15 years, but the first 5 years are interest free.
Right.
So you don't, or payment free, sorry. So you don't start your payments until the 5-year mark.
Right.
So it's also, you had to factor in that payment into your, I guess, your budget. You don't want to be there 5 years and say, well, I can't afford to pay it back.
Yep.
So it's important that we take that right from the beginning steps, just to let you know that there is going to be a repayment there.
So, volatile market. Obviously we're on an upswing here now. In, a situation where prices decrease, you sell at a loss. What happens then?
It's actually registered as a second mortgage and has to be paid out immediately on sale. It's first pay.
Oh.
So even a refinance, you
Right.
can get exceptions for
Yeah.
refinance, but
Yeah.
it does have to be paid out.
And then that entire program was done on a limit basis.
Absolutely, 150.
So do
Except
we,
for
like,
applicants.
do you keep track of, is there any way to keep track of the percentages, what's gone out? Is it maxed out now? Is it,
They don't really release these
Right.
numbers.
You just-
so it's
you
kind
just
of, I
apply.
guess you apply as you have a client in front of you. That's
yeah. So is that done on a pre-approval basis, or do you need an agreement?
You actually need an agreement for that one,
Wow.
and then you apply. So we'll go and we'll actually do the pre-approval, and we submit the application to Newfoundland Housing.
Right.
And they'll
Okay.
come back with, because it is limited
Yeah.
in terms of qualifying in the numbers.
Right. Okay. All right.
Let's go.
Let's get into it. Probably someone's going to be sneaky, isn't it? Oh, God. You ready?
Yeah.
All right. Going down the line, number 8. What advice do you have for homeowners to find themselves underwater on their mortgage or struggling to make payments?
That's a difficult question. It's very much so a case by case.
I'm fighting here, man.
Okay. That's a difficult question because it's very much a case by case situation. We have seen people downsize,
Yeah.
refinance to pay out other debts.
Yeah.
Trade in expensive cars, cheaper cars. It's situational.
You're right. Everything. You just got to take
There's
it.
no one answer for that question.
Right.
It's all what's going on in your life, in your household type thing.
So do you have many situations where people are coming to you?
The majority of Canadians are still paying in 3%.
Right.
They haven't felt
So
the
that
pain
hasn't
yet.
happened yet.
So it's starting to come now
Yeah.
as more and more renewals are coming.
Yeah.
And the lower rates are starting to come up for renewal this year and next.
So yeah. So this
coming.
year, and next year is going to be
Absolutely.
right. All right, the bomb. I've been warned about this one. Just take it away. Want to do one more question?
Yeah.
Considering technological advancements and evolving market trends, how do you see the process of obtaining a mortgage in Canada changing within the next decade?
It's pretty tough to say that it's going to be completely automated
Right.
because it's the biggest purchase you make in your life.
Yeah.
A lot of people need guidance. I mean, how many mortgages do you get in your life?
Right.
So we still have the personal feel. People want to reach out, want to be have their hand held through this process, and I don't see that going away anytime soon.
That's enough. That's enough.
And that last one was hot. Oh, that's gonna be bad. That's gonna be real bad in a few minutes.
Yeah.
But yeah.
So you don't see it going automated. You think it'll continue to be
There-
person to person.
I think it'll be more so I use the automation to make this process easier for you.
Right.
Whether it's online applications, which
Yeah.
are popular now, or
Yeah.
online document collecting, or
Yeah. Is there any
Things
like
like that.
AI software that kind of runs that pre-approval right now for you, or is it still got
it's
to go
just
through?
still a pretty simple online basic application. But there's been talks of maybe obtaining income documents straight from CRA.
Right.
Stuff like that comes. It'll make the process easier for you and me. And yeah,
All right. That's enough.
Yeah.
Thank you.
no problem.
I can't do this anymore.
Good day.
That was harder than I thought it was going to be. It's my first time going through this. Thank you, Andrew, for coming on today and going through this journey with me.
I hate you.
I hope you enjoyed it and learned a lot about mortgages. That's enough for you. It's enough for me. Thanks for stopping by. We'll see you on the next one.